Good morning, traders. Good morning, traders. Today we want to discuss a Fibonacci trader reveals a unique Fibonacci trading signal. A Fibonacci trader reveals a unique Fibonacci trading signal. Let's get started, my friend. So the signal, that unique Fibonacci signal, will take place right here. Where I put my green spot here, that's where the signal will take place. Alright, right here. Alright, so let me explain myself to you, my friend. I need to remind traders that when we are talking about Fibonacci, we are talking about advanced trading. Alright, so if you have been using technical indicator for some time, at one point in your trading life, you will start using Fibonacci extension, Fibonacci retracement, Fibonacci patterns. Alright, so the Fibonacci trading is advanced trading. Alright, very, very important. Alright, so what we are about to discuss is an advanced trading. If you are a new trader, you want to take it one step at a time. You want to understand that there are more things involved. All right. And one more thing. When we are talking about trading signal, let me clarify that because it's so important. When we are talking about Fibonacci trading signal, before we can talk about a signal, all right, we must have a trading setup. So there should be a Fibonacci trading setup that will generate the signal. Whenever you see any signal anywhere on any chart, either fired by a trading robot, a trading software, or anybody else talking about a trading signal, ask the question, which trading setup, okay, has generated that signal? Now, if you go back and you look at the trading setup, and the trading setup is not reliable, is not viable, is not a high probability trading setup, you can ignore the signal completely. So understand that the signal will come from a trading setup. So in this tutorial, I will be talking about a Fibonacci trading setup that will generate that unique, okay, Fibonacci trading signal. One more thing, my friend. All right. If you learn something new for the first time, okay, so if you have been following up for some time, you know what I'm about to say already. So I'm speaking to our new subscribers. So if you learn something new for the first time, it's very important that you practice, okay, so you may gain the skills and ability, okay, to use it. So the first step is to accumulate the knowledge, and the next step is to practice until you develop the skill, okay, to use, okay, what we are about to discuss here. All right. So now I'm ready to start my recording. So we are talking about a unique Fibonacci trading signal. So what I want you to look for, you want to look for an impulsive price move, a price bullish move or bearish move. So price going up. So you see that it's a move up nicely, like here. Look at this one. Price went up, yes or no? That's the first thing you want to look for. See, it goes up like this, nicely displaying high, low, side high. That's beautiful, isn't it? All right. There's another one here. Price went up, isn't it? Nicely, isn't it? That's what we are looking for. All right. That's all we are looking for. Okay. And here it is again. Price went up nicely. Here, look at this one. Straight line, almost. That's what we are looking for. Okay. Now you see it. All right. Let's start with the first one. So we are looking for the first condition. Price goes up from A to B nicely. I like to talk about a bullish stock now because it does not give me any trouble at all. All right. Instead of talking about bearish stock, people say, Joe, you're telling people to sell. Oh, you shouldn't do that. All right. So, all right. So bullish move, nice one. Okay. Then we want a pullback like this. So I'm going to color now into red. Attention, please. All right. A nice move down. But we don't want this move down to come all the way to the beginning of the prior move. We don't want that. We want it to stop somewhere here. Okay? And the third thing we are looking for is another move up again. All right? Another move up again. That's what we are looking for again. So first move up, and then it come back down a bit, and then the third move up. Okay? And now we are waiting for another move down. So we are looking for 4 price actions. All right? Are you with me? And then this one down. What you need to pay attention to, the last move, this one here. All right? We don't want to, what I want you to understand is that this move down should retrace this one, okay, between 38.2% and 88.2% Fibonacci retracement level. Did you get that? Price went up, pulled back a bit, and then went up a bit. All right? It can go up. This one can go up, but we don't want it to go all the way to form a double top. It can go up quite up to 78%. All right? Because what we are doing here, we are using Fibonacci patterns, but in a different way to make it like a market stable data. All right? So financial instrument went up, pulled back, okay, and then went up a bit. What usually is taking place, this move up is very important. This one here, the third move here is very important. Why? The reason is the price rally up a bit, but we want it to form a higher low here. This is very important. If you see a higher low, so price went up like this, pulled back, went up again, second time, but as it's pulling back now, is forming a higher low. But we want that higher low to be between 38.2% and 88.2% Fibonacci retracement of this last bullish move. Now, you may have to watch this video a few times if you are a new trader, so you may understand what we are talking about here. And also you want to remember that. So, without too much blah 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 from my side, let's look at this chart. You can see this is the first move, isn't it? So price went up nicely. First move, we are looking for 4 price action. 2 going up and 2 going down. All right, so this is it. Nice move, yes or no? Beautiful. Here it is. It came down. That's the second move. All right. And we don't want the second move, price action, to go all the way to the beginning of this one. It's critical for us. Now we want another move up, but we don't want it to form a double top. We don't want it to go all the way to be equal high here. We want it to stop somewhere here. That's the third move, which is the second bullish move. Are you with me? If you understand Fibonacci pattern, it shouldn't be difficult for you. But try not to focus too much on Fibonacci pattern, but think of it as a market stable data. All right. So price goes up first time, form a low. All right. Now it goes up again, form another low that is a higher low. That's what I want you to understand. There is a higher low here. See, do you see this higher low here? So what is happening in fact, price goes up and then pull back from a double bottom chart pattern with a higher low. This is what's happening here. This is what I want you to look for. But understand that this last move down should be between 38.2% and 88.2% Fibonacci retracement level. But I can assure you that you will see this on many charts, even on the 1 minute, on the 10 minutes, on the hourly, on the 50-minute average. But if you don't understand the market stable data that is taking place here, you may not see it, you may not recognize it. So the exercise that I'm doing here is to get your attention what we're talking about. We are focusing on the price action, but the last move down should be between 38.2% and 88.2% Fibonacci retracement level, which means we want to see a higher low right here. So here it is. Price went up, price pulled back, price went up. Now it formed what? Look at this one here. Is that a higher low? This is what we are talking about. Is this a higher low here? This is a high probability Fibonacci trading setup that will generate that unique Fibonacci signal. In fact, this one was so beautiful because the price formed again a double bottom here. So we have a triple bottom on a rising trend line. Can you remember that? Price goes up, and then we have a double bottom chart pattern with a higher low. Can you remember that? But this move down should be between 38.2% and 88.2% Fibonacci retracement level of this price action. It's happening all the time. So there is one here. Can you see? This is a unique Fibonacci trading setup that will generate a unique Fibonacci trading signal. But though we are talking about Fibonacci because of this last retracement here, is based on the market principle. All right? A financial instrument goes out and then pull back from a bullish chart pattern, can be an inverted head and shoulder chart pattern, can be, okay, but in this case we are talking about a higher low because we are using Fibonacci. We want this one to be between 38.2% and 88.2% Fibonacci retracement level. But with that, we have a bullish chart pattern. So if price goes up, pull back, and form a bullish chart pattern, that bullish chart pattern is a higher probability trading setup. A price goes down, rally up, and then form a bearish chart pattern. That bearish chart pattern is a high probability trading setup that will generate a unique, beautiful bearish trading signal. This is the market stable data. So for us that are building trading systems, all right, we do not build trading system based on market noise. We build trading system based on market stable data. If you can recognize a market stable data, you can build excellent trading system, and that will work nicely. All right. So here it is. Price goes up, pull back from a bullish chart pattern. That bullish chart pattern is a high probability trading setup. But here we are talking about a Fibonacci trading setup that is generating, okay, a unique Fibonacci trading signal. You see now? Now, by the way, if you have any question or suggestion, put in the comment section, all right? And in due course, I will record another video to answer your specific question. Okay, let's remove my lines, and I want to show you more because there are more patterns. Can you see the second one? So we see one now. So I will remove my drawing. I want you to look again on the chart and see whether you see, okay, another one. Because you want to train your eyes so you can see them quickly. Can you see another one? It's happening all over the place. Here it is again. Goes up, yes or no? All right. And then you pull back. It didn't cancel. It didn't come all the way to the beginning. Here it is. That's the second one. Train your eyes so you can pinpoint very fast those trading setup without blinking. All right, now it's clicking, isn't it? That's the third one. Move up. All right, you see now? Is it you get it now? And we want the last move down to be between 38.2% and 88.2% Fibonacci retracement level of this one here. So the last move down, this is critical because the Fibonacci trading setup should be between 38.2% and 88.2% Fibonacci retracement of the last move up. Now with that, you can trade this on a 50-minute time frame, on a 30-minute time frame, on an hourly time frame, on a weekly time frame, on a quarterly time frame, on a yearly time frame. Now, for position trader, you can look for this trading setup on the quarterly chart. The quarterly chart is the main time frame for position traders. And then you implement a top-down trading method. All right? You implement a top-down trading method to trade it. A multiple time frame trading method to trade it. You are a swing trader, you see this on the monthly chart. That's a unique Fibonacci trading setup. You don't just buy, don't just sell after the setup is in place. So that's why at the beginning of this tutorial, I told you that it's a trading setup that will generate the trading signal. Therefore, we use a multiple time frame trading method to control the risk. So, for those who do not know what is a multiple time frame trading method, you too search what is a multiple time frame trading method or what is a top-down trading method, and you will see a video from a 24 Stock Trader YouTube channel. And I was explaining to traders, okay, what is a multiple time frame trading method. All right. So you see this on the weekly chart. The weekly time frame will be your trading setup. So you will say, oh, this is a unique Fibonacci trading setup that is formed on a weekly chart. Now, then you will switch to either 2-hour time frame or 4-hour time frame, looking for that unique Fibonacci trading signal. Once the signal is fired, so to speak, all right, you will now go to the 15-minute time frame to enter the trade without violating the trading triangle, the market first, the sector before the individual financial instrument. Do not ignore the economy news and the fundamental which can change the dynamics of the technical trading. So don't be the purest technical trader. Combine the technical analysis with the fundamental. Use the trading triangle, all right, and always implement a top-down trading method. Especially if you are a swing trader, you want to use a top-down trading method. Day trader also will do that. So you see now, price goes up, price pull back, okay, went up again, pull back between 38.2% and 88.2% level. Here again, it's a market stable data. Price goes up, price pull back, and form what? A bullish chart pattern. Now you see, it becomes easier now to recognize or to understand what I'm talking about here. Just now that I'm talking about market stable data. By the way, market stable data is a truth in the financial market, something undeniable, okay, that we have observed, okay, that is true more than 80% of the time. Is what I call market stable data. Price goes up, price pull back, form a bullish chart pattern. Price goes down, rally out, form a bearish chart pattern. Well, here it is. But the last move should be between 38.2% and 88.6% Fibonacci retracement level of this move up. You see now? So we see a second one. You see? Beautiful trading setup for swing trading. So now I'm on a monthly chart. I want to swing trade. So I will just start salivating. So remember, one more thing, very important, all right? Because it's quite exciting, all right? I don't want you to go and make a mistake, all right? So you see that this, draw the vertical line like I did here, all right? And then draw, if you want it to start changing direction. So you want to see a few candlestick changing first here. You see here, start changing direction. Or more experienced traders can monitor this by going to the signal time frame as the price start pulling back, all right? I'm not going to dwell on this, but something you can do, draw a vertical line there, draw the line as the price changes direction here, all right, and then implement a top-down trading method. As the price going up, remember, the price does not have to go up like it did here. It does not have to. It can change direction quickly. Grab how many pips you want and manage the trade carefully, because the price can start going up a little bit like this and then come back down. So you want to control the trade. It's not that because you enter nicely, okay, because sometimes you will see you start going down and then you fizzle out, all right? Very important, okay? All right, will you do that? Okay, so you don't make mistakes, all right? So this is the second one. Can you see another one on this chart? Let's move on because we don't want the video to be too long. There's another one. Look on the chart. There's another one. You should see now. Have you seen it? If you did, okay, let me know in the comment section whether you found it or not. We want your interaction, friend. We want your interaction. There is another one. Can you see it? Here it is. Okay, I'll show you now. Price goes up. Yes or no? And then it pull back. Yes or no? But here we have a bit of problem. Can you see the problem? It went all the way to the top to form a double top. We don't want that. You see what has happened here? We don't want that. So this one went all the way up to the top. We don't want that. We don't want that. Remember? We don't want this one to go all the way to form a double top. Here it is, form a double top. However, as it pulled back, this one stopped here. And it started changing direction. But it went up a bit. But because it formed a double top, you see, it didn't go up very much. That's why we don't want this one to go and form a double top and just fizzle out. There are more we can do with this unique Fibonacci trading signal. Understand that there is a unique Fibonacci trading setup that will generate a unique Fibonacci trading signal. Without a reliable trading setup, there is no winning trading signal. When we see a trading setup, we must use a multiple time frame trading method to trade it without ignoring the economy news and the fundamentals. All right, this is the end of this tutorial. Okay, I hope you have learned something from it. Okay, but most importantly, that you will start practicing until you master this trading strategy. If you have any question or suggestion, okay, put it in the comment section. And in due course, I will be recording another video to answer your specific question. We are the TSTWSYS008 traders talking about Fibonacci trader reveals a unique Fibonacci trading signal. Happy trading to you all, and speak to you soon.